loud. Very weird.
All right, Sean, anytime we're ready.
Yeah, it's 10:40.
Okay. All right, and ladies and gentlemen, what we're going to do with the rest of the time that we have, we're going to go through two tax returns. The first one is the Walters, and this is going to be tax year 2023. So we're only going to be able to prepare a federal return. And then the next one, which is Adams, we're going to go ahead and prepare a 2022, which gives us federal and state. Okay, so back to the Walters, they're filing a joint return. Both of them want that $3 to go to the election campaign fund. And as we've mentioned before, that $3 is not going to reduce the amount of their refund or increase the amount of what they owe. It's simply an order to the federal government to separate or segregate funds and put it in that campaign fund. And then when someone is eligible to draw from the fund, then they do that with basically an application, but you got to qualify. Okay, so we've got our administrative data for Lisa and Robert, and they're born in 55. So if you do the math, that means they're on Social Security. And then here we have this item regarding Robert with his medical issue, and he has his eye doctor saying that he can't see better than 2200 in his better eye with corrective lenses, i.e. glasses or contact lenses. And so when you hear the term eye doctor, some people think that's an ophthalmologist who's a medical doctor who specializes in eyes. Some people think it is a optometrist. There we go, optometrist. Optometrists are not medical doctors, but they do eye stuff. And so medical report may come from an optometrist or an ophthalmologist. And in this particular case, he's got the medical report. So there's the administrative data. They live in Mission Viejo. They both are on Social Security. And box 5, that amount is what you're going to be typing in, and we'll show you in just a moment. The box 6 amount is going to be the federal tax withheld. And you're going to see this once in a while where federal tax is withheld. And if you have someone who's got Social Security and other types of income, and they have insufficient withholding, they're going to ask you, hey, how do I withhold more monies so I don't get clobbered at the end of the year? And that would be through either additional withholdings or estimated tax payments or both. And then Medicare premiums, I've had this discussion with people. I'm not aware of any federal statute that requires individuals to sign up for Medicare. In fact, I know I talked to this guy the other day. He's in his early 70s, and I asked him, hey, are you signed up for Medicare? He says, no. He doesn't pay premiums. He's got something else going on. And so he's not, and he's a Social Security recipient, but he does not receive or does not pay medical premiums. And so you may see that from time to time, but typically on the 1099, the SSA 1099, if they're eligible for Medicare, they'll typically be paying those premiums. And then what happens is when we enter that data into the software, then that medical premium will roll over to the Schedule A as an alpha on the 1040 because those are insurance premiums.
Jerry, Clayton had a comment there about those Medicare. Go.
Yeah, you're not required to pay through your Social Security benefits, but you are required at the age of 65 to sign up for Medicare. Otherwise, penalties get pretty steep pretty quick.
Now that begs a question. So if there's a requirement to sign up for Medicare, then does one need to pay premiums?
That would depend upon a couple other factors. But at the age of 65, there is a federal law where you are required to sign up for Medicare. I'd have to look a little bit more into it, but my memory serves me for the drug component, it's 1% per month. And then for part A and B, it's 10% for the full year. But it is a requirement, and every year that you delay, that 10% or 1% gets tacked on to your natural premium. So it is a requirement.
It's my understanding that it's if you do it late, you get a penalty, but if you never apply for it, then there's no penalty and there's no real requirement.
If you do it late, there is a penalty, but it is at 65. I want to say it's 3 months before or 9 months after or 6 months after, but you do have to sign up for it. You do not have to receive it.
Okay, so that might be the situation with the individual I talked to who's never been on Medicare. He's 72, has no intention of signing up for Medicare. He does receive Social Security, and he doesn't have premiums taken out. But generally, what you're going to see, this is again my experience, you're generally going to see Social Security recipients who will have Medicare premiums withheld, i.e. they're paying Medicare premiums for that coverage. That's typically what you're going to see. All right, thank you. That was Clayton, and who else was that?
That was Tom.
And Tom. Are you guys in the same line of work?
No, I just have aged parents that have dealt with this stuff.
Oh, okay.
It's
All right. So next in our fact pattern,
practice.
we've got the taxpayers. They have a 1099 issued to them. And this typically what you're going to see when someone has interest income from a financial institution, there's typically going to be a 1099, and the requirement is if it's $10 or more, that needs to be issued. Sometimes you're going to have someone who has interest income of maybe $3 or $4 or $5. And they're going to say, well, I didn't get a 1099 in information return. And you'll acknowledge that and say, okay, well, you still have to pay income tax on the interest income, whether it's $2 or $2,000, regardless of the issuance of information return. Okay, so that's the information regarding the 1099. And then we have Lisa's Schedule C, and you might remember this from a couple, 2 or 3 weeks ago. We do have, I think about 10% of our clients, our VITA clients, that are Schedule C folks. And what that means is they're typically going to be sole proprietors. We did talk about the qualified joint venture, but typically you're going to see an individual who's involved in some line of work. So in her particular case, she materially participates. This is something we don't really have to worry about in VITA. We're going to ask the question, hey, tell us about your business. And if they're involved in the business on a regular and ongoing basis, that means they materially participate. In this case, she's a French language tutor, and the business code will show you that in just a moment. She tutors at her kitchen table, which means she has no travel expense. She received $10,000 in gross payments. And you might remember the discussion we had regarding cash and accrual method taxpayers. In the VITA program, we only work with cash method taxpayers. And that is generally stated as you're going to report your income when you receive it or constructively receive it, and you're going to report your expenses when you pay them. That's the cash method. In this case, she had $500 of supplies expense. And then she also announces to you that she has purchased a Coach purse, which costs $350. And so we're going to talk about what is called the ordinary and necessary expense rule. And this is something you'll see at the VITA site where individuals will give you a laundry list of expenses. You'll run through it. And if you see something that just doesn't make sense, then you'll have that brief conversation with your VITA client. Their personal identification number, which they've given you, enter that into the software. We're going to show you that. And then they have bank information. They want a direct deposit. They're going to electronically file the return. And that would be, Sean, if I remember correctly, that's Emily, who's going to be the ERO this season.
That's correct.
Okay, and she's highly experienced ERO, and she also has worked at the Garden Grove campus, and she does a great job. So anyway, they want that. They want direct deposit. They provided information regarding their checking account, and so we'll get into that. Okay, so this is our scenario, and now I'm going to take command of
Jerry, I think you're on your checking account information, you got the routing number and the checking account number reversed.
you know, that's possible. I'm far from perfect, but we're going to jump into the software. And here's an important point. When you are talking to that client, they're going to give you this information. They're typically, I think last season, we wrote it down on the 13614C. And some people, like if you say, Jerry, what's your checking account number? My answer to you would be, I don't know. And if you ask me, what's my routing number? My response would be, I don't know. But you can find that. And typically you can find that with a canceled check, with a deposit slip. Sometimes you have to reach back to the financial institution. Sometimes they can go online and find it. That might take a couple minutes. Okay, all right, so let's go ahead. I'm gonna take command of the slide or the show here. And let's see if I can. All right. Sean, give me a moment here. Let me see if I can reload this thing. All right, Sean, it may be more than a moment here. I'm working on a computer I haven't used in about 7 years. All right, Sean, it looks like I am a no-go at this station, so let's do this so we can continue the show here.
Sure.
Let's let me go ahead and I'll have to bring this up on my, oh, here we go. Can you see anything now?
I see your face.
How about welcome to the practice lab?
No,
You can't see that?
I see a cabinet behind you.
Yeah, you're not sharing your screen.
But-
Want to try that again? Sharing your screen.
You gotta talk slower. I'm an old man.
All right, you need to share your screen. So the green button on the bottom of the Zoom
That's
window.
easy for you to say. Okay, here we go. Let's see if that works. How
There
about
you
now?
go. Yeah, practice
All right.
lab.
So give me a moment. Let me bring up the fact pattern. And let's go to our return here. This is the Walters. All right. And as we go through this particular return, we'll talk about certain topics. If you have questions, just throw it out there. Okay, let's go to the very basics. And if you see right here, and I've made this mistake only about maybe 400 to 500 times. When you are in the software, just make sure you're in the right tax year, because sometimes you're doing a 2022 or maybe a 2021. Just make sure you get the right tax year. Okay, let's jump into the Walters return. Married filing joint, again, that would be a couple that chooses to do that. We mentioned before, there's no judge that's going to have the authority to order you to file jointly. Married filing joint is an election. You choose to do it. If you don't want to file a joint return, you don't have to. There are other options, but you don't have to. Most people will file joint because is going to be bigger bang for the bucks as far as a refund. But again, this is an election. And when you do file a joint return, there's a legal term, it's called joint and several liability, which means you're on the hook for the tax as an individual, and you're on the hook for the tax as a married couple. And I've seen this hundreds and hundreds of times. People file joint, and then a couple, 2 or 3 years goes by. The individual says, well, I'm divorced from that guy or that gal, and I'm not responsible for the tax. And the IRS says, sure you are. Now, that's a general rule. There's an exception to that. And that means if your husband's living in a dumpster and you're living in a nice house and you got money, the IRS is going to camp out on your doorstep, and they're going to go ahead and make sure you pay the tax for that married filing joint year, even though you are now divorced from your spouse. Here's our administrative data. You want to make sure you're capturing the name per the Social Security card. And that's why it's so important to get the Social Security card from the taxpayer, because I have met many a person who uses some type of nickname. In fact, I know this one practitioner, she never uses her first name. She always uses her middle name, but on her tax return, she'd have to use her given first name. Okay, there's her date of birth. That's usually not an issue. Sometimes moms and dads have issues regarding the date of birth of their child, and that's when they're going to have to maybe get the birth certificate or do a little digging. I know that may sound a little odd, but I've seen it, I've experienced it, and so that's why you want to make sure you capture the date of birth. If you have the incorrect date of birth and you attempt to electronically file, then the return will be rejected, which means we have to perfect it.
Great. You had mentioned that you need to put exactly the name that's on their Social Security card.
Correct.
If the person is recently married and still has their maiden name, how do you deal with that?
What I would do is I would say, okay, we're filing, in this case, the 2023 return. If your name has changed, then have you gone down to Social Security? Like, for example, when my wife and I got married, she marched down to Social Security and she says, hey, I married this Jerry guy, and this is the name that I want. And then Social Security, they made their changes, and she now had a different name, which is reflected on her Social Security account. Did I help you out?
So do they need to do that before they file their return then?
Well, the short answer is yes, because if you're filing a return, in this case, we've got a 2023, we want to make sure that Lisa Walters, that's her name according to Social Security. So, yeah.
Thank you.
Sure. Okay, and so they want that $3 to go to the Presidential Election Campaign Fund. Do not be sucked into a political argument. We don't do that at the VITA site. This is an order that the taxpayer has given the federal government, and if the taxpayer doesn't want to give that order, then we would not check that particular box. We've already talked about cryptocurrency. Don't take the bait if someone says, I've sold cryptocurrency or digital assets. You tell them, understood. We do not assist taxpayers who have sold cryptocurrency or digital assets. So you need to find another tax person to help you out. We don't do that. Now, if you buy cryptocurrency or digital assets, no worries, we can assist you. But when you dispose of them or sell them, we can't help you. We've already talked about a language other than English, and this is something that's been around for a few years. It's a great tool for someone who speaks maybe Spanish or maybe Mandarin Chinese or maybe Vietnamese, and that way they can get the written communications. Because think about it. Think about how frustrating it is when you get a document in another language and you don't speak that language. So this is a good thing, I think, that the IRS has done. I think this is mandated by Congress. And then we have Robert, and that's his name. And then sometimes people say, well, who needs to go first on the tax return? The answer is, it does not matter. A lot of times a married couple, the guy goes first, but it doesn't matter. On the master file transcript, if you change the order from year to year, then each year you have an account, and you simply have, in this case, the taxpayer wife is first, but it doesn't matter. You have a date of birth, we have her social, And in this case, we've indicated, according to the tax definition in that IRS publication 501, the spouse is blind. And that does not mean completely sightless. Again, we talked about that. If you go back to that scenario, that 2200 in the better eye, and it's corrected. And I think I told the story, I think 2 years ago, I had a taxpayer. We were doing a Zoom. This is a VITA taxpayer. And eventually she says, Jerry, you don't recognize that I'm completely blind. I said, no, I didn't. You're showing me documents. We're talking. I didn't know that. That was the question I was going to ask you. And she goes, yeah, I'm completely blind. And we conducted the interview, and I indicated to her that we're going to check that blind box, which means her standard deduction is going to be larger. There's a kicker, if you will. Okay, the $3 to the Presidential Election Campaign Fund, again, an order by the taxpayer to the federal government. And we've got our address information. And usually that's not an issue. If someone has moved, you want to make sure that you reflect that current address. And if you move in the middle of the year and there's no filing coming about, then you want to tell the taxpayer, tell the IRS, tell the Franchise Tax Board that you moved and this is your new address. And if you've talked to anybody who's received a statutory notice of deficiency at an old address, it's very frustrating. Those official documents coming out by the feds or the state, the taxpayer wants to get it at their current address. That's very important. Usually you only get the one number, but if you have a married couple and they want to provide that secondary number, that's important because, again, if the return has to be perfected, then the ERO, the electronic return originator, is going to call, and sometimes maybe the first number doesn't work. They'll call that second number, or they'll email someone to help perfect that return. All right, and then this is where you would go if you have someone who has that identity protection personal identification number. This is the letter that goes out when your information has either been compromised or you think it's been compromised. And the whole idea behind this IPPIN, once you receive this letter, then you can electronically file your return. Okay, cancel that. All right, and then let's go to our W-2, which we don't have any because these are retired individuals. So let's go to our first item, interest and dividends. And so we're going to go to this particular slide, interest or dividends. Open that up. And then you can see that entry there. If you have more than one bank interest coming to the taxpayer, then you would add that. If you have someone who has been issued a 1099 DIV, then they have dividend income, they'd report that on an additional one. But let's open this up. So we have the name of the financial institution. You're going to find that EIN, the employer identification number, on the 1099 INT, or you may find, I've seen this before, where the 1099 INT is basically embedded with a bank statement. So typically at the bottom of the first page, it may have what looks like a 1099 INT, so you can take it off there. And if you're looking for EINs, this is something with a Google search, you can usually find EINs. It's usually not an issue if you need to. There's our mailing address. And then anytime you have a bank account, this is what I know. If there's something different, someone shout out. When you have a bank account, you either have an account in your name or it's a joint account. And in this case, it's a joint account, which means both the husband and the wife are on the account. And in this case, they have $600 of interest income. And that's the only data that we have from that 1099. Every once in a while, you might have some federal tax withheld. If that's the case, you're going to populate that. Okay, we'll hit continue. And then we'll go to our next tab, which is going to be our Social Security benefits. And so this is what it looks like. Sometimes you'll get an RRB 1099, and that's going to be that Railroad Retirement Board. And so I don't know when this board was set up, but basically what it is, it's like Social Security, but it's for individuals who worked for the railroads. And again, there are exceptions after exceptions after exceptions. And for example, you will meet individuals who are seniors, maybe they're 70 years old or 75 years old, and they've never paid a penny into Social Security, and they'll never get Social Security. So you're going to see that from time to time. I think I gave the example a few weeks ago. My boss at the IRS never paid into Social Security. She never will get Social Security. She gets what is called the civil service retirement, which is a federal retirement for federal employees. Okay, so here we go. We got Lisa's Social Security benefits from box 5, and this is the form SSA 1099, something that's issued by Social Security Administration to recipients. Sometimes you'll have tax withheld. In this case, she's got 500. She does pay Medicare premiums, and that's populated right on the SSA 1099. Robert is also a beneficiary, and he receives 30,000. Probably the most I've ever seen in Social Security benefits has been about $40,000. And what that means is when you pay into Social Security, there is a relationship between what you pay in and what you receive. However, there is no direct relationship. And so if you got a job making $10 million a year, you're definitely going to get some pretty good Social Security benefits. But again, there's no direct relationship to what you pay in and what you get. He's got tax withheld, and he also pays Medicare. Now, we're not going to do this, but sometimes you have an individual who says, I've applied for my benefits. It took Social Security 2 or 3 years to pay them, and I got a big old check. And of course, I got a piece of paper with that check that said, here are the payments for the respective years. Now, it's called a lump sum payment. You have to get in your publication 4012, and then you're going to go to lump sum payment, and you'll start that worksheet. You see that every once in a while. And I recall going to an AARP site a few years ago, and apparently that's something that you see a lot of. Any questions about Social Security?
There was a question in the chat on the interest. If the account has only one name and the people say it's joint, is that going to be a joint? Or, and then if it's an individual account, is it okay for them to list that on their joint return?
I'll answer that question first. If you're filing a joint return, then what you're doing, you're reporting all of your income, and that would be for both spouses. As far as someone having an account and they say that it's an individual account, again, same thing. You're filing a joint return. You're going to report it on the joint return. Is there a federal or a state requirement to go ahead and open up a joint return if you're married? No, you can open up an individual account if you want to. Now, of course, if you do that, then there's some considerations. What happens if you get run over by a truck and you're gone? That there's going to be a little bit of an effort to get that money out of the account. And so I don't know. I don't know if this is a recommendation or maybe just a thought. I'll call it a thought. If you were married and you got money and you want to open up a bank account, it's probably a good idea to have a joint account. That way you don't have to worry about going to the bank when that other person's gone and taking money out of that account. And that's something that, and I think we have a couple, 2 or 3 financial planners on the call. And that's why I think I've said before, I have a financial planner. I think I'm smarter in a couple issues, but I think it's important to have a financial planner because they're going to tell you what you need to know, and that way you can make an informed decision. And again, I think a joint account is a good idea if you're married. And any questions regarding that from the financial planners?
Clay, this is the financial advisor. If you're married, it's usually better to get a joint account. As far as filing, it's an individual. So you get your 1099 because you got a sole bank account just in your own name. That still goes on your joint return in that form of 1099 interest or dividends. And it doesn't make an IRA because it's that joint and several liability that you have, the IRS sees, so they see it also as income.
Yeah,
that
when you file,
okay?
yeah, when you file a joint return again, when you report all the income from that couple, with that joint civil liability, you don't see that very often, but when you do see it, IRS is going after the person, with the money, basically. And, there are exceptions, called the innocent spouse rule, but, we don't worry about that in VITA. We just know when you file a joint return, you're on the hook for the tax. Okay, good.
Yeah,
Good.
Think about like individual retirement accounts. An IRA is in one person's name only, but both spouses are liable for the taxes on those distributions. So it's the same thing with non-qualified accounts.
Yeah, and you get these questions at the VITA site. And so again, I use the term show them the way, don't advocate for them. And there are all sorts of professionals out there. And it's a matter of picking up the phone or driving to the office or making an appointment and then talking to that subject matter expert about your topic, because in the VITA program, we don't do that. We prepare returns. That's what we do. Okay, good. Thank you for that. All right, Schedule C. And this is kind of a review. If you're new or newer, the Schedule C, you're going to see this about 10% of the time. And this is typically going to be for a sole proprietor. So this is our, I think the pilots call this a heads up display, but this is basically your roll up. In this case, she's got income of 10K. She's got ordinary and necessary expenses of 5K. That purse that she bought, I'm sure it's a very nice purse. I've seen Coach purses. They are nice purses. They're a little expensive, but that has nothing to do with her business as a tutor. Nothing whatsoever. That is what is called a personal and family living expense. So you can't deduct it on a return. So when someone gives you a laundry list of expenses, you look at it real quick and you may have some questions. And you may say, okay, why is this? Or maybe you'll ask it differently. You'll say, okay, what does this do? What does this have to do with your business? And they may say, well, in order to be calm at the kitchen table, I have to have this particular large marble ball that I can roll in my hands and remain calm. That's probably not a deductible expense. Paper, pencils, ink cartridges, travel, those are deductible expenses. Let's open this up. Go to the top, basic information. This is for Lisa. Now, in this case, she doesn't have a doing business as, she doesn't have an EIN, and so we can leave all that blank. Sometimes you're gonna populate that based on what the taxpayer pays you. And then business codes. This is for education. And if you open up the business codes, you're going to see a laundry list, and you can go for a long, long time. And I've had VITA volunteers spend 20 or 30 minutes and I tell them, you know something, this is basically quick and dirty, if you will. Find something that's close enough. In this case, we've got education services, and that's, as they say, good enough for government work. Okay, we do that. And then questions about the business. This is something you're basically going to leave alone. You're probably not going to make any changes. We only do the cash method of accounting in the VITA program. We do not work with taxpayers that have inventory. If they have inventory, we say, I'm sorry, that's beyond the scope. It's outside of the scope. You're going to have to find someone else to help you out. And then we only help out individuals that materially participate. And there is a treasury regulation that talks about this in detail, but for our purposes, regular and ongoing involvement in the business. If they don't materially participate, we don't help them in the VITA program. So basically, these are all pre-populated. You just leave them alone. And this one down here, you just leave it alone. Right here, and Sean, I can't remember. I think this is permissible in the VITA program. The qualified joint venture. And what that means is it's like a mom and pop. They're involved in the business. If you indicate that, what happens is the software will generate two Schedule Cs, splitting the income and splitting the expenses.
I can look it up in the 4012 book.
Yeah, I can't remember, but that's something you probably want to grapple with, because you may see it maybe once or twice in the season. Okay, we're going to go to income. And this is the way I do business. When I sit across the table from someone, I ask him, tell me about all of your income as a self-employed individual. And sometimes they'll have a sophisticated way of tracking it. Maybe they're using QuickBooks or something else. Or like I said before, maybe they push a piece of paper across the table and in pencil, they've listed all of their receipts. Either way is permissible. They have to have a method of accounting. And in this case, she had 10,000. And then we're going to go to general expenses, cost of goods. That would be for a retailer. We don't do that in the VITA program. So general expenses, we're going to open that up. And this is a laundry list. And so when someone has expenses, it boils down to this. Is the expense ordinary? Is it necessary? Is there a business purpose behind the expense? And is the expense reasonable in amount? And I think I used this example once before. So let's say you've got, we'll use her. She's a French tutor. Let's say she goes to her daughter and says, hey, I need to drum up some business as a French tutor. So prepare a one-page document that I can pin up in the coffee shops around town. And the daughter knocks it out and says, here you go, Mom. And Mom says, how long did it take you? It took me 20 minutes. Okay, here's $5,000 for that 20 minutes. That is an ordinary expense. It is necessary. There's a business purpose, but that $5,000 to a 9-year-old kid is unreasonable in amount. So that's what you need to keep in mind when people come to you with their various expenses. Typically, they're gonna list what they paid. In this case, supplies of $500, and that's the entirety of her expense. The coach purse is a family, or what we call a personal and family living expense, and that's not allowed.
Jerry, we talked before about things like they need an internet for their thing. If it's not used exclusively for the business, typically we tell them not to declare those expenses.
Yeah, this is a way I handle internet. If someone says I've got internet, well, yeah, just about everybody I know has internet. And I'll use me as an example. I've got internet in my house. I use it to shop. I use it to get plane tickets. I use it to talk to my brothers and sisters and my relatives. I use it to teach some of my accounting and tax classes. I use it for VITA. Oh, and then I use it for my business. I don't deduct anything on my tax return for internet. And the same thing for the telephone. I have one cellular telephone. I use it for everything in my life. I don't get an itemized list from my carrier. I don't deduct cellular telephone on my federal or state tax return.
What about if they say they have a room that's dedicated just for their tutoring?
Well, if they have a room dedicated to their tutoring, I say, okay, that's very good. However, for the purposes of the VITA tax program, we do not calculate the home office deduction. That's something you're going to have to go and have another person calculate. We don't do that in VITA. Okay, so there we go. And so we got the one expense. We mentioned before, if you've got someone who's driving their vehicle for their business, that would be what is called car and truck expenses. And this may look familiar. And if you are familiar with 2022 tax returns, we know in 2022, you had to differentiate between the miles the first half of the year and the second half of the year. This is something, because we're in 2023, this doesn't exist in 2023. And so the software folks are going to go ahead and make this correction. So when you're working with the real software in a month, couple months, this will no longer exist because, again, in 2023, we didn't split the business miles. Now, what does exist in 2023 on your live software will be commuting. And commuting is going from your residence to your place of work to your residence. That's not deductible. Other expenses, whatever else, you're going to church, you're going to the laundromat, you're going to a restaurant, something like that. And then down here, these questions will be similar to what you're going to see in real life. And this is going to be regarding the vehicle. So you're going to populate that. And then, of course, describe the vehicle and when it was placed into service. Okay, so we're out of there.
Hey, Jerry, a quick question that popped up. Why are there two different meal expenses? One of them's 50%, one of them's 80%.
What I remember, 80%, I think that has to do with certain types of drivers. Yeah, that's, and for our purposes, we're not going to see that. We're not going to see that. I think that's it. Okay, so back to our heads up display, as they say. And this is the net income. And we know that the net income is going to be subject to self-employment tax. We also know that the 1/2 self-employment tax deduction is also going to be calculated. That's an adjustment to income. And then every once in a while, you've made entries and you realize it's all garbled. And you remember when you were 4 years old, you want it to go away. If you want something to go away, you hit that red garbage can icon and all of your entries for the Schedule C will go away. All right, what else do we have? I think that's it. Let's go to our health insurance. And there are many different types of health insurance. One type is Medicare. And if you've got Medicare for the entire year, then you're going to indicate you're not in Covered California. Covered California is a program provided for by the Affordable Care Act. If you remember, this came out in 2010. This legislation includes a lot of tax provisions and then a lot of other things. But again, they have Medicare, so they're not in Covered California. If you are in Covered California, what that means is when you come to the VITA site, you've got to ask for the 1095-A as an alpha. All right, there's no state returns, so we can hit continue. And then what we're going to do is we are going to go to e-file. Most of your taxpayers want to e-file, and a screen like this will come up with the live software. It's going to look a little bit different, but we're going to run through the practice lab here. So direct deposit. This is the amount of the federal refund, $158. They want direct deposit. We've got an email address that we've captured. We've got a personal identification number that we've captured for both the husband and the spouse. And your ERO, your electronic return originator, he or she is going to attend to this. All right, we don't charge fees in VITA. And then in this particular example, it says you can allocate your refund to various accounts. And it's probably a good idea if you have someone and they're sitting there like, what should I do? Well, it's up to you, but if you want to, you can put money into, again, up to 3 accounts, which means you can put money in your checking account and money in your savings account, or you can buy savings bonds. And in this case, we've indicated checking. We ask the name of the financial institution. That refund, if you hit this pull refund, it'll populate, and this is the federal refund. And then the routing number, you can see that. And Sean, I think you're right. I think that's a bank account number.
Yeah, that's the routing
I
number
should
for
say
Chase Bank.
A fake bank account number. And then when you type in the bank account number, you gotta populate it twice. And then this is a fake bank account number. So you got to populate both the routing number and the account number.
Oh, I just recognized that was the actual routing number for Chase Bank.
It is.
I've seen it a lot of times.
And I'll be the first to say I am far from perfect. Okay, and so if you want to populate another bank account, you can certainly do that. And then you can type in the amount. So $158 refund, maybe you're going to put $100 in your checking account, and maybe you'll put $50 in your or $58 in your savings account. So you can do that.
Is there any requirement that if it's a joint return that it has to go to a joint account, or it really doesn't matter?
What I remember, and I'm doing this in memory, if you've got a joint tax return, I think it has to go to a joint account.
Yeah.
Yeah, I think so. Now, if you do have a joint tax return, then it makes sense. It's the right thing to do. It's a fair thing to do because it belongs to both the husband and the wife. It should go to a joint account because they both own it.
So that was my question. Thanks, Tom. This is Clay. So they couldn't send it to like a grandchild, the refund sent to a grandchild directly, they would have to.
You know, I'm not aware of that. Anything's possible, but I'm not aware of that. So
I think
someone
they
has that.
could. I think they can do a savings bonds to someone else, but not,
Oh, yeah, you can do savings bonds, yeah. Yeah, but the whole idea, if you've got Wilma and Fred Flintstone, and they're a married couple and they're gonna get a refund, then it needs to go to Wilma and Fred's return. Okay, and then savings bonds, you can see that if you want to purchase bonds. If you've never purchased savings bonds, I have. I've done that for many, many years. And what it is, I guess it's all electronic right now. You're simply lending money to the federal government. And then the federal government, they're pretty good about paying interest. I don't know what it is right now. And then when you redeem your savings bonds, there's different ways to do it. I go down to my local bank with a stack of paper, and I cash them in, and they give me a 1099 INT. Okay, so that's the bank account information. And I think I mentioned before, and this is really difficult. I remember one time getting a call from a guy who went to the VITA site, St. Killian's, and said, Jerry, the refund went to the wrong account. Thinking, well, I'm sorry about that. And then I asked him, well, what do you want me to do? He goes, I want you to get involved. I said, no, we don't advocate. Now, what I'll do, I'll give you some recommendations. I'll show you the way. But at the end of the day, this is going to be your fight, your battle, your job, your responsibility. And that's happened a number of times. And that's why we type it in twice. And that's why we have the taxpayer nod their head and say, yes, this is my routing number and this is my bank account number. But unfortunately, people make mistakes, and sometimes he goes to the wrong account. I actually had one of my clients, paying client, he gave me his bank account number and his routing number. And I looked at him and I pushed the piece of paper across the desk and I said, is that your information? He read it, he nodded his head. And it wasn't. It was an account that had been closed many years ago. And so what happens is, if the monies are not able to be direct deposited, then there's a default, and the default is a paper check is sent to the taxpayer.
So Jerry, this is Sean. I looked in the 4012 book, and on page K23, it says that a joint refund has to be deposited into a joint account. And also the taxpayers' names have to be on the account. So you can't send it to a friend's account or a relative's account.
what about a trust where the owner of the account is the family trust?
Well, then you'd have to be doing taxes for a trust, which we don't do.
Not necessarily. All of my accounts are now in our trust name, not in our own names.
But are your taxes filed as an individual, or
Yeah, it's joint.
but does the trust have your name on it, or?
Yeah, it has the name on it too.
Probably be a survivor's trust or.
Yeah.
Yeah, the only thing I've ever seen, guys, is money's going for a couple to their joint account. So that's all I've seen.
Tom, do you have your trust titled you and your spouse as the trustees of the trust?
Yeah.
Yeah, then your name's on it.
Yeah, so it's the Griffith Family Trust.
Yes.
TTE, Tom and spouse.
Yep.
That would most likely work for the IRS. Most of my clients as a financial planner,
Well, it has in the past, so they've given it to me. So
yeah.
Oh, good. Then you have evidence that it does work for you. Okay. All right. Here we go. Continuing. And then this particular software is not set up for the various questions. You're going to have demographic information that'll be asked of the client. We'll have information pertaining to, are they a veteran? Are they disabled? Were they there when the return was prepared and quality reviewed? So you simply do the yes, no, and then you move on. In this case, we only have one question. And we'll pass that. And then your ERO is going to see something like this. It's ready to be e-file. Of course, what happens is, as a preparer, you're going to set this up for review. And so you're gonna see that in the software you're going to be working with next month. And then what happens is, once the return is reviewed, then it's going to be indicated as ready to e-file. And once you have it ready to e-file, you as a tax preparer will not have those permissions. The permissions are going to stick with your site coordinator and your ERO, and sometimes there's one other person. And then once that happens, your ERO will e-file the return. And then when you transmit the return, it doesn't mean that the return is correct. It doesn't mean it's perfect. It simply means the return has been transmitted to the software company, and then the software company pushes it to the IRS. So that's all it means. It's transmitted. So when someone says your return's been electronically filed, that means it's filed. Like let's say you file a paper return with the IRS. Well, that paper return may be incorrect, but the IRS has a filed return. So that's all that means. It has a filed return. Okay, at this point, let's go to save and return, and let's show you a couple things in the software. Okay, and I'm going to do it this way because the other way will take too long, and I'll probably get out of Zoom. So here's your 2023. You got
Can you expand it a little bigger?
What's the question?
Sorry, my dog was barking. Can you make the font a little bigger? Just expand the,
Let's see if I can on this computer. How about that?
I can see it. Thank you.
All right, very good. Yeah, this is my wife's computer, so it's working like a champ. Okay, so here we go. We've got the administrative data up here. And now we're going to come down to the information regarding the taxable interest. That's at $600. Total Social Security benefits are $47,000, and just a small portion are taxable. I get this question all the time from seniors. They go, Jerry, why are my Social Security benefits taxed in part? I'm thinking that is easy because the United States Congress has made it so, and it's built into the software, and that's it. There's your answer. I don't get into a political discussion. I said that's just the way it is. Okay, additional income, we'll talk about that shortly. Actually, we'll talk about it now. This is the Schedule C as in Charlie, and this is what is called your net income. And then, of course, you have to pay individual income tax on that net income. You also have to pay self-employment tax. And that's another concept individuals will ask you about, like, what's the Social Security tax? What's this tax? What's that tax? And you can tell them on a tax return, you have different types of taxes. One tax you're going to see is individual income tax, and then the tax you may see is self-employment tax. There's different types of taxes. Your adjustment to income is 1/2 of that Social Security tax they paid, and that's a good thing. And then, of course, AGI is the difference between, not the difference, but it's going to be, let's see if this is correct here. Yeah, Sean, I'm looking at the quick numbers here, and I think for instructional purposes, we're just going to have to say that, because if you do the math, I don't think that makes sense. But anyway, AGI is defined as your total income less your adjustments. And there are different types of adjustments that we've talked about in the past. That standard deduction, this is going to be, if you come over here, this is for most individuals, but if you are a senior, 65 or older, and we've got the husband who's blind, then your standard deduction is going to be a little greater here. And so that's $32,200. Now, this is something you're going to see on a VITA return. If you're working with professional software, it's going to show something different. In this case, their taxable income is a negative amount, which is a good thing, I guess, for them. Other type of software, that negative amount will be shown. But for our purposes, it'll say 0, which means there's no taxable income. All right, we're going to go up here, go to page 2.
Hey, there's a quick question on that. I noticed there was no QBI, qualified business income deduction. Is that something that we handle at VITA?
We will see that in VITA, the QBID, the qualified business income deduction. You will see that. Generally, that's automatic. If it populates, then you're in good shape.
So it's not something that we need to worry about figuring out the calculations or, where they qualify or anything like that?
Typically not, but again, as I've mentioned, you always have a curveball. You always have an exception to the general rule. And that's why your 4012 is going to be your your go-to document. Okay, so self-employment tax, this is going to be generated at $1,342. That's going to be on that net income of $9,500. And some taxpayers, usually it's going to be young adults. They've never seen this before. They're not familiar with the Self-Employment Contributions Act. They're going to say, what's this? And you tell them, well, you have to pay into the Social Security system if you've got a Schedule C and your net income is over $400. Okay. Here are your payments. That $1,500, that pertains to the SSA 1099, and that's going to be withholding. Typically, you don't see withholding on the Social Security, but when you do, that'll be reflected here on line 25 Bravo. Okay. And then we come down here, the difference between your withholding and your, in this case, your self-employment tax is going to be that $158. And as I've mentioned before, on line 24, I'm like anybody else. When you show me money, I get excited. But what you really want to do when you have that brief discussion with your taxpayer, you want to tell them line 24 is the total tax liability. And this is the tax that you either have paid or will pay. But again, most people, they go right down to the refund, which is fine. But what I do with my clients, both VITA client and paying client, I tell them, this is your total tax. And you're going to pay this somehow, some way. In this case, they did because they got withholding. Let's see. And then with your, and for some reason that didn't populate with the information, but this is where your information is going to be populated regarding your financial institution. And you will have pushback from time to time. Clients will say, I don't want my money to go to a bank. I want a paper check. You tell them, hey, direct deposit, it's safer, it's quicker. And you're going to have people say, I don't want that. And I tell them, okay, then what we'll do is we'll not populate this section in the software and you will receive a paper check. I don't argue with them. I'll try to encourage them, show them the way, but at the end of the day, I'll say, okay, fine, we'll do what you want. Okay, so that's page 2 of the 1040. Here's your Schedule 1. We've mentioned this before. On page 1 is additional income. Page 2 are adjustments to income. And at the VITA site, you're going to see many, many different types of additional income. Typically, what you're going to see, unemployment compensation, you'll see gambling winnings, you'll see cancellation of debt, you'll see jury duty pay, prizes and awards, and what else? And of course, the Schedule C, you'll see some Schedule C, so different types. And you will also, from time to time, see a situation where someone has filed their 2022 return. They took advantage of all our tax benefit of the state income tax on the Schedule A. And then they subsequently received a state tax return from California. And so what that means is that tax refund may be taxable in full or in part. And that's called the tax benefit rule. And so that begs the question when someone comes to the VITA site, do you have your previous tax returns? And that would be both federal and state. So you can look. If they went to the VITA site at St. Killian's, that'll be in the software already. But typically they'll come to the site with a hard copy return, so you can check that out. Okay, so that is your additional income. Let's go to the adjustments to income. And in this case, you have that 1/2 self-employment tax deduction, which is a good thing. That'll be reflected there. We do have a lot of educators, high school teachers, middle school teachers, and I don't know what the first one is. I call it, I think it's grammar school. I think I went to elementary. I think it's called grammar. So if you have a K through 12 educator and they're pulling money out of their pocket and they're buying supplies for the kids, then they can take that educator expense on adjustments to income. And other things you may see at the VITA site, that penalty and early withdrawal of savings, I'm seeing that from time to time. Alimony, again, there's old rules and new rules. The old rules were you could take an adjustment to income if you're paying alimony. And again, you have to be ordered by a judicial official who has the jurisdiction to order that. I've seen where people are making payments to their former spouse because they're a nice person. That is not alimony paid. And the other things you're going to see from time to time would be that student loan interest deduction. There's a lot of young adults that have a student loan. They're paying on student loans. I've even seen, I saw a lady one time, she was paying on a student loan. I think she was 70 or 72. So you're going to see that from time to time. We talked about jury duty pay. If you receive jury duty pay and then you're required to remit that check to your employer, then step number one, you're going to report the jury duty pay as income. Step number two, you'll take that adjustment to income. And so I guess the saying is giveth and taketh away, if you will. All right, so that's basically what you're going to see. Another thing, my wife does this from time to time when she was a site coordinator. People would come in and go, well, I want to pay less tax. Well, there are options. And one option is if you're eligible to take a deduction from an individual retirement arrangement contribution, then you can make your contribution and you can take a deduction on your federal tax return. So that's a good thing. All right, any questions about adjustments to income?
I have a question, Jerry. This is Nancy.
Yes,
And-
Nancy.
And when you're doing alimony, since California doesn't conform to the federal for the older ones, let's see, I'm getting it mixed up because I just learned about this. You have to actually go into the California return to make the adjustment.
Correct. And
And I was not aware of that until recently in your class.
Yeah, that's one of
I would-
those nonconformity issues. And so you'd open up the California software, and thankfully, that portion of the software for California is pretty easy to do. You just say, okay, what was paid, and let me restate that. What was received by an individual for alimony, then you'd make that change in the software.
So it's just not automatically, because doing VITA for a while, I thought, well, if I put it in the federal, then the California will just automatically take care of it. But all these nonconformity issues from the 2017 TC, whatever, tax change, there's a lot of nonconformities now. And so we actually have to do extra work to actually go in there and physically make the adjustment. It doesn't automatically happen.
Yeah, that's a short answer. Now, certain things will automatically happen. So for example, on unemployment compensation, even though there's non-conformity on the California side, that'll be automatic in the software. But yeah, sometimes you will have to go in and navigate. And that's why it's important when you're starting at the VITA site, you get that live software they're going to be working with. And I'll use the term navigate, just bouncing around. Kind of get familiar where the tabs are and where to make those changes. That's important.
Yes, thank you very much.
Sure. Okay, and then this is additional taxes. Mentioned this before, you'll see it once or twice, and when it happens, the taxpayer is like looking at you, cocking their head and say, what? If you're in covered California, and sometimes you are required to go back into covered California and change the data that you've entered 5-6 months ago, because things have happened in your life. You got a big pay raise, your spouse has left, your babies have grown up and left, you got new babies, you got married, whatever. You got to go back into covered California because sometimes your subsidy is too much from the taxpayers. And if it's too much, then the taxpayers want it back. And sometimes this will kick in when you are in covered California. So the takeaway is, and again, show them the way. Hey, if you're in covered California and something's changed, go back in and make those changes. And if you don't know how to do it, find yourself a navigator, and usually with a nonprofit, they'll be able to help you out where you can navigate your data changes in covered California. You can see the self-employment tax. There's a Schedule SE that's generated. Most of your older adults, they've been in business, they know this. Some of your younger adults, they have no concept. So again, you just educate them real quick. Let's see, I think that's about all I want to show there. Let's go to other taxes. There's nothing here other than the SE tax, okay? And then additional credits and payments. Although we don't have any refundable or non-refundable credits on this particular return, this is a particular schedule that you'll see a lot of with our VITA clients, because a lot of our clients have these refundable or non-refundable credits. A lot of our folks have education credits, the retirement savings contribution credit. They're going to have the dependent care credit. So you're going to see this from time to time. I mentioned this before. Even though the elderly and disabled credit is alive and well with the Schedule R's and Romeo, in the many, many years I've been doing taxes, I think I've seen this 2 or 3 times. So usually it's for very low income individuals, but that may generate. Okay, so that's that. Let's go to 8. This is page 2. And
That
here's
will-
another.
Jerry,
ahead.
that will populate on its own, correct? So you brought up retirement credits, retirement saving credits. That will populate on its own from the information we gather from the W-2 or 1099 from the institution, correct?
That's correct. So what's going to happen? You may have someone who's in a 401k program, they're moderate income, and then they're going to have deferred compensation. And that would appear on the schedule W-2. The code for that is Delta, just a single D. And then what will happen is this particular credit will generate, and it'll be described on the 8880.
Where my thought was a non-deductible contribution to an IRA.
Oh yeah, you can go to your Roth IRA, and you can enter that into the software, and then sometimes then you'll see that, I should say, you'll see that on the 8880.
Or, yeah, I was actually thinking about a non-deductible contribution to a traditional IRA, which they probably wouldn't be in our scope of service anyway, because they're earning too much money.
Yeah, typically you're going to see something that is deferred and they're moderate income. They're going to take that credit. Okay, here's another thing. We mentioned this before, and you're going to see this a few times. Someone's in covered California. Their subsidy is too low. The taxpayers are not providing the sufficient subsidy, and that's when the net premium tax credit kicks in. And that's based on, again, the entries from the 1095 alpha into the software, again, for covered California. Okay, I think that's all we need to see there. Okay, Sean, I'm going to throw it back to you. We've got 11:47. When we come back, we'll tackle the Maria Adams return. There, Sean?
Sorry, I was muted. I am pausing it during the break.
Okay, so let's come back at 11:57. So if you get distracted, you can go ahead and come back. Yes. All right, so Sean, I think we're about ready to start.
Okay, I've already turned the recording back on.
And Sean, can you see the screen that says basic information?
I see that screen.
Perfect, perfect, perfect. Okay, so ladies and gentlemen, what we're going to do now, we're going to run through the Maria Adams tax return. And you can see in the upper left-hand corner, this is 2022, so we can get the flavor of both the federal and the state return. Give you a little practice here. Again, I don't know when 2023 state of California will be loaded in the practice lab, but when it is, Sean, I'm sure you'll make notifications.
Yeah, we'll let everybody know when they tell us.
Okay, all right, great. All right, so let's go ahead and start with Maria Adams, and I'm going to go ahead and indicate she's head of household. This is one of the tougher ones. It's not impossible, but you have to look at that decision tree for filing status. And so typically what you'll see for head of household, you'll see an individual who has minor children, and then that adult is paying for the household, or they're paying for the bills, the mortgage, the rent, utility, and all of that. But the decision tree is an important document in the publication 4012 to determine if they're eligible for head of household filing status. Okay, we're going to get there. Here's Maria's information. And she's about 30 years old. She does not indicate that $3 to the presidential election campaign fund. We've got a mailing address for her. And we've captured her phone number and her email address. Okay, I don't think we've mentioned this, Sean. One thing you want to avoid, we've talked about, do not troll for business at the VITA site. And you don't want to troll for dates. And so if you're helping out a taxpayer and you say, hey, I think I want to date this person, you don't want to do that at the VITA site. So stay away from that. You don't want to make people feel uncomfortable. Okay, and so now we're going to go to, in this case, her dependent, and she has her daughter, Alma. So we're going to open that up, and her daughter's about 5. And you can see if you've got multiple children, you would add a dependent here. And typically your dependents are going to be minor children. Sometimes you're going to have a mom or a dad. You just want to make sure they meet their requirement, all the tests. So here's Alma. There's her date of birth. And we've already talked about, typically you'll have social, sometimes you'll have an ITIN, individual taxpayer identification number. And every once in a while, I've seen this maybe 3 or 4 times, adoption taxpayer identification number. And so in this case, you'll indicate if they're citizens, that's typically what you're going to have, either a US citizen or a resident alien. She's a daughter. She's been in the house for 12 months. And it says down here, if your taxpayer is born in the year that you're preparing the return for, then you're going to indicate 12 months. So if you have a baby that's born, in this case, this is 2022, on December 31st, 2022, and you're preparing the 2022 tax return, that means that baby is most likely a dependent. Okay, so get past that. And then we're going to get past this. Okay, in this case, Maria is a customer service representative and she works at a bank, so we'll open up the W-2. Here's our heads-up display. And we're going to capture this right from the W-2. Typically, you're going to have a standard W-2. If it's a corrected W-2, no harm, no foul. And if the individual does not have a W-2, but they have a pay stub that has year-end information, then you can indicate a substitute W-2. I've done that a few times. In fact, I did that for myself about 10 or 12 years ago when I was working overseas, teaching overseas, and the school never issued me a W-2, but they did pay me. So I had year-end data. All right, here's our employer identification number, the name of the financial institution that she works at. And then here are the information regarding wages. You can see here, box 1, 3, and 5, we know she doesn't have a 401k. She's not contributing to a 401k because if she was, then her wages would be lower than box 3 and 5. These amount here in box 4 and 6, auto population based on the FICA tax amount, which is 6.2% for FICA and then 1.45% for Medicare. She does have withholding of $1,700. This verification code, you may see that from time to time. That's right from the W-2. If that's the case, you'd enter that data. We already talked about tips. And this is something you'll see at the VITA site again and again and again, where someone is in some line of work and they're being compensated either entirely by tips or partially by tips. And so the rule is all of your income is going to be reported. So you're going to have that discussion. Now, what I do, and Sean, I think you'll probably do what I do at the site. I'm not an auditor. I'm not a revenue agent anymore. So when I talk to a taxpayer, I'm thinking, what you're telling me makes no sense because you're in California, you're in Orange County. You can't live off of $3,000 in Orange County when your rent is $1,800 a month. And so I'll just have a very pleasant conversation, say, how are you living? And usually the taxpayer says, it's not easy. I'm thinking, well, hold on. It's mathematically impossible. what other funds do you have? Oh, like I think I told you this. I had a guy, he says, Jerry, I cashed out my 401k a couple, 2 or 3 years ago. It was like $400,000, paid a bunch of tax, and I got some money sitting in the bank. I'm thinking, okay, that definitely explains how you're living in Orange County, making a mortgage payment of $2,200 a month. Right here, you can see that code 12 is going to be your, typically we use D as in Delta, that's deferred compensation. And then Delta Delta, that is going to be that health insurance paid by the employer on behalf of the employee. If you have one of the other codes, you can look those up. I don't have any of these memorized other than Delta and Delta Delta. In this case, we don't have a code, so we'll come back up here. SDI, this is something you'll see on a lot of W-2s, but not all W-2s. I think I mentioned before, I've never paid a penny into SDI, and I've lived in California for decades, and I've never paid a penny into this, but a lot of people do, which means if they qualify once they become sick or injured, or maybe they're an expectant mother and they go on disability, that means that disability check is a non-taxable event, both federal and state. But again, SDI, and you can see right there, it says it carries forward to the Schedule A as an alpha. This is a tax. This is an occupational tax. All right, and then sometimes you're going to have a retirement plan. If that's the case, it'll indicate that. If you have both Delta and, or let me restate that, if you have different codes in box 14 or different codes in box 12, then you have opportunities to make additional entries. And here, this is box 12. It might be the California Volunteer Plan, but in this case, we just have the California SDI. Down here in California section, typically your state wages will be the same as federal wages. And as I've mentioned before, when I was living and working in the country of Cuba, I didn't have any responsibility to the state of California for tax. So sometimes you'll see there is a difference, but typically it's the same as box 1. And then you do have a state employer identification number. For some reason, I see transposition errors in the state ID, the EIN. So that's why we have that quality review to check each and every entry to make sure it's correct. Because if you have a transposition error, then what you have to do, you have to perfect that to make sure it's electronically filed. State income tax, this is withheld by the employer, and then of course remitted to the state of California. And this appears on the California return, that $800 of withholding. We've mentioned before 18, 19, and 20 for the state of California, not utilized. There's no jurisdiction in California that has individual income tax other than the Franchise Tax Board. So again, 18, 19, 20 not used. And if you have another W-2, I've had, I think at one point, some VITA client, I think maybe 7 or 8 W-2s. They would work maybe a couple weeks. I think it was an actor, and then go on to another gig, and then go on to another gig. And so you may see that. So you simply make the entries. All right, so this one we've got Alma. She has some type of capital gains, and in the fact pattern, it says that she bought shares of a corporation, Wells Corporation, and she purchased them in 2022 and then subsequently sold them in 2022. And that's called the short-term capital gains, which means you're going to be taxed at ordinary income rates. And of course, that's also the same thing on a California return. If it were to be long-term, then on the federal return, it'll be taxed at a preferential rate. The state of California does not have preferential tax rates for sale of capital assets. So in this case, she bought it for $1,500 and she sold it for $1,200. So that means she's got a loss of $300 as shown up here. So let's go back into, we haven't done this for a while. Let's go back into the capital gains. When you're talking about capital assets, typically you're talking about shares in a corporation. It could be your personal residence. It could be your personal automobile. It could be the shoes that you own. But again, when you sell a capital asset, then you have disposition and you have to determine whether or not you've got a gain or a loss. So here's the date acquired. Here's the date sold. Same year, 2022. That tells me it's a short term. Short term is defined as you're holding that capital asset for 1 year or less. Over 1 year is long term. And this is typically what you're going to see. There are differences. There are exceptions, if you will. But typically, the taxpayer will come in with a 1099-B from the brokerage house, and cost basis is going to be reported to the IRS. That's typically what.
I lost audio. Did anybody else?
No audio.
No audio after 1099B. So Jerry, I don't know if you cut out or you just stopped in the middle of the sentence.
He's
Let's-
offline.
Let's see. Sean, can you hear my?
Okay, we hear you now.
There he is.
All right. Must be that sunspot. Okay, so
Exactly.
where did we go silent? What part?
1099B received a statement from the broker.
Oh, okay, gotcha. Okay, so that's typically what you're going to see, and then of course you reflect the cost. And usually this is not a difficult thing. It's reported on your 1099-B as in Bravo. I've had clients, both VITA clients and paying clients, say, Jerry, I have no idea what the cost is. Okay, well, it's going to take a little bit of work. You're going to do the work. We'll show you the way. And then maybe they have to come back the next week, or maybe they can go online at the VITA site, because you typically can find the cost of something that you bought a few years ago. Sometimes you have to pay some type of subscription, but usually the 1099-B is going to do the job. Okay, so here you go. Again, a loss of $300. And the general rule is you can take losses up to $3,000 in the tax year. Okay, and let's come. This is that jury duty pay. And you can see this is step number one. We're going to report the income that she has received. In this case, she paid or she was paid $70, 70. And you can see that drop down menu. You're going to use this drop down menu a lot of times, because you're going to have information regarding other income. And if it doesn't meet one of these titles, chart of account, if you will, then you come down here to other income. And once you determine this is a taxable event, and my go-to document, in addition to the 4012, is going to be the publication 525, IRS publication 525. Okay, so we got jury duty pay. That's step number one. And then we're going to go to the adjustment right away, because we know she relinquished this check to her employer. And when you do that, then you can take an adjustment to income if it'll populate. All right, it doesn't populate. Well, I entered that the other day, so I don't know what to tell you. All right, well, there's what is called an adjustment to income for $70. So again, you report the 70, you take away the 70, the net effect is 0. Let's see, EITC, we're going to show you that in a little bit. Let's go to health insurance. And again, covered California. The 1095 alpha will be issued to the covered California customer. And if they've got a 1095, here's the deal. You've got to file a tax return. And in this case, we're going to say, yes, she did receive a 1095 alpha. This is what is called the tax family. So this is mom and daughter, and mom and daughter are covered for the entire year. And then you answer these questions. Typically, your first question regarding the advanced premium tax credit regarding repayment is going to be no. And then here where it says the 1095A, did you have coverage for January through December? Essentially, all of the monthly amounts are the same for those 12 months. And in this case, the answer is going to be yes. But if it would be no, then you're going to see something like this. And you're simply going to populate each and every month. You're going to take that 1095A, and you're going to populate column A as an alpha for each and every month. And you're going to populate the column B as in Bravo for each and every month. And column C as in Charlie for each and every month. Okay, so in our particular case, the answer is Bravo is 6,224. And line 33 Charlie is 3656. And then here's an example where we talked about it before, the software that we're using in Lincoln Learn. Sometimes there's issues with it. So when I prepared this return a couple days ago, I actually populated all of this before. And when I came to the screen just now, it's all gone. So here we go. We'll hit continue. When you go to household income, it says enter the AGI for your dependents. This is a little baby, doesn't have any. None of this, none of this, and none of this. If you're talking about the form, IRS form 2555, this is something you don't do at the St. Killian's VITA program. That's the foreign earned income exclusion form for the IRS. We don't do that unless you have international certification and Sean says you can do it. State tax return, let's jump into that and show you a couple things. Basic information. For head of household, this is something, unless the 2023 program has changed, it'll look something like this. We've indicated the qualifying person is her daughter, Alma. We've indicated that. And in this particular case, this little kid has no income. You typically will not see minor children with income in the VITA program. And if they do, you got to remember something. If they have income, and let's say it's earned income from, they have a part-time job, they're 14, 15, 16, something like that. You're gonna utilize a separate return for that individual for earned income. You don't combine the income for mom and son or daughter. In this case, going back to the head of household, qualifying person, which is Alma, and in this case, live with mom for the entire year. And you come down here, mom is not legally married, so that means she either got divorced or maybe lost her husband, something like that. And continue. We mentioned before at the St. Killian's VITA site, you don't work with active duty military personnel. It doesn't mean it's a complex return. You have to be certified. And again, Sean would have to approve that because you need 2 people minimum at the site, one to prepare the return, one to do the quality review. Shameless plug for Coastline College. If you have a military person and they come to the Coastline College campus in Garden Grove, we have about 10 or 12 people who are certified, and we prepare tax returns for reserve components, like reserve members of the, let me restate that, members of the reserve component and or active duty military folks.
Jerry, you had said before we can't recommend anyone. If they come to the St. Killian's thing in their military, can we recommend they go to the Garden Grove one or whatever?
You can, because we are VITA volunteers. We don't charge for preparation. So yes, you can send them our way. We're open most Fridays from 10 o'clock in the morning to 1 o'clock in the afternoon at the Garden Grove campus. Okay, other things that you should be aware of. This is again, California. It looks similar to 2023. We're in 2022 right now. And so renter's credit is something that you will see a lot of if you're renting property for more than half the year. And it has to be California property that's not exempt. Then you can indicate renter's credit. This is a non-refundable credit. which it's a modest amount, $60 for a single person, 120 for a married couple. But again, it's still a credit. And then over here, California earned income and that foster youth, they're kind of connected. This is where you're going to populate the California Form 3514 that we've talked about. And so it says here, has the IRS previously disallowed your credit? And that can either be through a mathematical error or in some cases fraud. And I said before, fraud is a bad word. And when you engage in fraud with the IRS and the Franchise Tax Board, that typically means you're going to have a difficult time. Fraud for EITC means even though you're eligible for it, there is a prohibition for getting it for 10 years. So in this case, there's no previously disallowed EITC. There's no previously disallowed California EITC. And let's see, let's open up this. Slow this down here. Okay, and this talks about the address. And I think we had put in, let's put in her address, 40 Dumpling. And then we talked about IHSS. You will see that from time to time, and that's typically when you have a loved one who is caring for another loved one, if you will. We don't have that here. I've not seen prison inmate wages in the VITA program before, but you might have someone who was incarcerated. They get out of prison and they have a filing requirement or want to go ahead and file a return, and they may have a payment from not from the previous year, but from the current year. So that's something you may see. All right, I think that's all we need to do there. So let's go
Sure,
ahead.
back to that one where you just had on the pension, that other smaller line.
You want me to go to a pension?
No, where you just had that prison income. There's the second part of it from very small. Or pension from non-qualified plan, is that a true pension? Or could that be a non-qualified annuity?
For something like that, I would simply get into the 4012 and say, okay, I know what a pension is. I know what a non-qualified plan is, but do they have a pension from a non-qualified plan? And that probably goes to that interview that you're going to have with the client, where you're going to ask about various sources of income. All right, and let's see, we're done with that. Let's see, miscellaneous. This kind of something you may see from time to time. We have estimated payments that sometimes are made by the taxpayer to the state of California. And this is something that you may see from time to time. Someone owes money and they want to pay over time, kind of like a car note. And that would be an installment agreement. When you sign an installment agreement, you'd sign with the federal government if you owed money. And then if you owe the state of California, you'd sign with the state of California. Two different animals, two different installment agreements. Okay, so let's exit. And continue, and let's see what else we have here. Let's go back to our e-file. And so your live tax software is going to look something like this. In this case, she has a federal refund of almost $5,000, and she has a state refund of $800. And so in this particular case, she's going to electronically file. She wants to do that where it says e-file, and she has chosen the paper check route, which you can do. State of California, if you want to, you can do that differently. You can e-file state of California and not the federal. Typically, you're going to e-file both. In this case, she's going to e-file and she wants a paper check. All right, we've entered the information. The 8879, that's the document, is the e-file authorization, and there's both a federal and a state. And Sean, if I'm not mistaken, we had clients last year sign both the federal and the state 8879.
That's right. We had him sign both if it was applicable.
Okay, okay. All right, so we're gonna hit continue. And you can see that again, we don't charge. If you use TaxSlayer Pro, if you're a tax professional, the TaxSlayer Pro software looks very similar to what we're looking at here. If the taxpayer provides their driver's license, this is optional. And I'm the type of guy, when you tell me this is optional, I don't do it. But if you choose to do that, you can enter the data regarding the driver's license. Here are the laundry list of questions that will be quite similar to tax year 2023. It talks about, are they conversational English? Can they read in English? Do they have a disability? In this case, no. Are they a member? These are, again, questions. And if I'm not mistaken, I believe the Orange County United Way sets this up.
Do you,
Brett, go ahead.
I think I heard somebody else, but I'll say it, if you know the answer, and or do you say you obviously speak English? Can I check yes, or how do you say
Sure. If you ask the person, hey, are you conversational English? And they go, yes.
that?
Well,
Okay,
very
so
well.
you're
This
gonna
is-
ask them anyway, even though they.
Well,
Yeah.
these are these are all on the intake interview form on the back, the last page.
Yes, they are.
And so people will have already filled it out. And
Yeah. Yeah.
you have to put what they said.
13614C. Yeah.
If they say they can't speak English, but they're talking to you fine, it doesn't matter. You put they can't speak English.
Okay, understand, thanks.
And then, of course, you've got, in this case, she didn't have a spouse, so we're going to leave that alone. Ethnicity, this is something that's asked on the 13614C. Are you physically present during the return prep and quality review? The answer for most taxpayers will be yes, unless you utilize drop-off. And so we go there. And we're going to hit continue. And you can see a little prompt up here. It says e-file is not going to be available. Okay, very good. And anytime you see red pop up in the program, that means you got to go and you got to fix what needs to be fixed. All right. And then it's ready to e-file. So that means again, it's gone through the preparation process. It's gone through the quality review. And now it's ready to be e-filed by our electronic return originator. All right, we're going to go ahead and hit save and return. And then we'll go through this portion again, 2022. 2022 looks a little bit different than 2023 because every year there are either modest changes, minor changes, and sometimes significant changes from the previous year. Here are the wages that she's received. You can see right here that $300 shows a little negative sign, and that's going to be her her loss from her market dealing, i.e. her stock market. There's that other income. This is going to be the jury duty pay. And then we have our adjustment income, which is that jury duty pay she remitted to her employer. AGI, adjusted gross income, is defined as total income less your adjustments. You can see over here, she's head of household. And this section over here is for most taxpayers. If you have a senior, someone who's 65 or older, there's an additional amount to their standard deduction, which will not be shown over here. This is for most individuals. And then you can see her taxable income would be her AGI less her standard deduction. Okay, come up here, go to page 2. Page 2, you can see that she's got her total income. Let me restate that. She has tax of $1,233, and then she's got her non-refundable credit. Non-refundable credits are defined as a dollar for dollar reduction of the tax. And so she has zero tax liability. And you're going to see that a lot in the VITA program. A lot of these non-refundable credits will essentially gobble up the tax that's calculated on line 16. She had withholding of $1,700. She had the EITC for her child, and then the advanced child tax credit, and that's populated here. And then line 31, which we'll talk about in just a moment. So all of this adds up to $32.99. And then her withholding of $1,700. And then now we've got the overpayment, which is the refund. But again, I would encourage you when you're going through the return with your client, your VITA client, make sure you spend just maybe about 15 seconds in total tax liability. And when there is an amount there, that means the taxpayer says, okay, I either will pay it or have paid some tax. Okay. And in this case, she wants a paper check. So this is not going to be populated here. And that is page 1. Let's go to page 2. I stand corrected. That was page 2. Let's go to page 3. Okay, here's the additional income and adjustments to income. We've got that jury duty pay. Got that reflected here. And let's go to page 4, which would be the adjustments to income. And you can see the jury duty pay, and that's, again, the check that she remitted to her employer. I do see a lot of jury duty pay in the VITA program, and I'm not sure what experiences our seasoned volunteers have. Additional taxes. Looks like we've got all zeros there. And on page 2, we've got all zeros there. Credits and payments. Looks like we've got all zeros there. And here we go, that net premium tax credit. And so based on the data that I entered into the software from her covered California 1095A, she received insufficient subsidy. And that's when this net premium tax credit kicks in to the tune of $700. So good for her. Okay, that's that. Okay, and then let me go ahead and see if I can, let's see, I think that's it. The California return, I think I'll pass on the California return, but there is a refund of $800. Okay, Sean, that takes care of everything we need to talk about. Are there any questions that we need to address, or do you want to have any type of discussion?
Well, I don't see any questions in the chat.
Did you have any announcements for the VITA site at St. Killian's?
Well, we went over a little bit of this while we were waiting for you to come online, that we're going to be doing a dry run for all the folks, not just the new ones, but everybody. Walk through the process, get to meet everybody on the 20th of January. And then our first actual day will be open to process taxes is January 27th. We're going to be open for 12 weekends. We're not going to be open on Easter weekend, but all the rest of them will do.
Okay. And then Sean, your folks, are you allowing them to certify just at the basic level?
Yeah, if they can't make it through, we encourage everybody to try the advanced, but if you're only comfortable with basic, and we're always going to have some folks that just want to be greeters, and they're just going to do volunteer standards of conduct and intake interviews, quality review, and that's okay too.
Okay. All right. And then did you want to query the participants and see if they had any comments or questions?
Yeah, let's open it up. Anybody have anything they'd like to discuss?
Yeah, Clay, I've got a question. You went a little quick on the 1095A section. where you said most of the time we're gonna be answering no. I just wanted a little clarification on what the qualifiers are for a yes answer on that.
Ooh, that would require some research and,
Well,
and
there
extra
was
time.
there was a second line that was, I struggled to read. Yeah, it was one, if you were not a US resident, was one of it, and the other was something else a little fuzzy.
All right, let me
Fuzzy,
open
like
that up then
visually
so you can
fuzzy.
take a look at it. Are you referring to this part right here?
Yeah, where it was like, if we mark yes, and then it was a little bit deeper than that. Yeah, there we go, that one, first one. I can't read that. Procedure for getting consulting education certified. If you were considered lawfully present in the US or you meet the health coverage tax credit criteria. Do you know what
Yeah,
that?
I think the answer to your question is the vast majority of the time you're going to answer no to that question.
Okay,
The meeting the criteria is if you make too much money, then you're not allowed to get any. And it says right there, if you make more than 400% of the poverty line, you're not supposed to ever get any, and you have to pay it all back.
okay. Do we know what the poverty line is?
Sure, you can go on Google or look in your 4012 and you can see
Yeah.
the dollar amount depending on the number of people in the household.
So I bet most of the people that we're getting in front of would be out of scope if we had to mark yes on this.
Yeah, or stated differently, in the years I've been doing this, where the Covered California thing appeared in the software, I have never seen an individual with a yes. I've always seen individuals with a no.
Okay.
Did you have a question regarding the second question?
You said Google, no, that was the question. You said Google what the poverty line is, and 400 times that, that's easy math.
Yeah, and I think that's also in the 4012. Sean, I don't know if you looked that up, but I think it's 12.
Yeah, a lot of times when you're going through the 4012, if something's out of scope, it'll just say right on that page, this is out of scope. So
All right, okay. Then that takes you to that. So Sean, we're done a little bit early. And if
That's
you
okay.
if you have anything else, please announce it. I have the only announcement I have, if you want to work on Fridays at the Garden Grove College campus the Coastline College in Garden Grove, all you got to do is show up. It's nice for you to give me a call, but if you show up with your government issued identification, passport, driver's license, whatever the case is, and if you have completed the certifications, then you'll have your volunteer agreement. If you just show up and you haven't completed anything, I'll put you in the corner. I'll give you a computer, check your ID, and then you can start certifying. And once you get certified, then you can go to work at our site.
I
Sean?
had one question. This is Nancy. I put it in the chat. I just want to know if you had covered about how to get continuing education to become certified hours. What's the procedure for that?
Yeah, we talked about continuing education. That would be on your, I'm sorry, did you say a continuing education for a tax practitioner?
I guess if to have a PIN, a P10,
yeah.
you have to have that.
Yeah, you're gonna, on your volunteer agreement on page 2 toward the bottom, there's information, because you're gonna populate that in the Link and Learn program. And then what will happen, you'll go to your site coordinator and say, okay, I'm working at the site and I've completed so many hours. And then what will happen is your site coordinator will certify that, and they'll get that document to the Orange County United Way. And the Orange County United Way will forward that information to the IRS for your continuing education credits.
And just so the people who haven't worked at St. Killian before know how the process works for us, I'm sure everybody has a similar process, but we actually have a check-in and check-out sheet people sign on. So we know how many hours you work each weekend, and we submit our volunteer hours to the United Way once a week.
Also, if I can make an announcement, if you don't worry about bringing your own personal computers if you don't want to. You can if you want to, but we will supply laptops. We have plenty of laptops if you want to use them, and they're all updated with the latest updates, and they'll be available to you if you need them. You're welcome to use your own laptop, but if you don't want to, then you have them. All right.
Yeah, and at Garden Grove at Coastline College, we've got about 16 computers, and so you'll use the college computers if you work at the site.
Well, I guess that's it.
All right, Sean, I think that may take care of it, and I think that's it.
Well, thanks, Jerry. And then just, I guess we're done with all of our tax preparation training for the year. There is going to be a training session from the Franchise Tax Board that's going to be happening on the first weekend in January, January 6th. I don't know if we're going to be able to record that one or not, but when we get the link from the Franchise Tax Board, I'll send it out to everybody that was on these training sessions. You may have to just watch it live, but sometimes those recordings, you can watch them later on. It's up to them. The Franchise Tax Board's doing the training. We're not doing it. We're just the middleman.
All right. Well, everybody, thanks again for joining us. I appreciate it. And for those of you who choose to work at my site on Fridays, please, I'm going to throw my number out. You can call me and say, Jerry, I'm coming to your site on such and such a date. My telephone number is area code 949-633-6378.
Barry, can you repeat that again?
Oh, sure. 949-633-6378.
Thank you.
What are your hours of operation there?
We're going to be open most Fridays from 10 a.m. until 1 p.m. And we do provide a lunch for people who work at the site as a volunteer. All right, Sean, I think that does it.
All right. Well, thanks a lot, Jerry, for all the training. Another great year.